It spiked and came all the way back. Okay, so
there's a 50-cent spike up and spike down.
Right. So we spiked to 31.30. Right now we're at 30.95. The trade that Tom was talking about. Now, if you haven't test drove the Nadex product, folks, okay, Nadex is, to me, is absolutely, if you're going to trade news on the oil in general.
Trades like this, I really like. So I was like, we should go over this. I like how you set it up. I like you had some orders already in there to sell them, maybe
I did.
For half your position.
Maybe we sold them. We'll find out.
It was close. I don't think it got there. I was taking a peek on it.
Okay.
Yeah, it's still there.
Okay. So gold, oil. I like trading the NDX one all the time.
Yeah.
Those ones there, folks. The defined risk is so cool for what you're putting up versus what you can lose.
Yeah, defined risk on the bottom side, and you still have massive potential on the upside. You will end up paying some premium when you have a massive risk reward. But I mean, in this trade, and we'll go over it, you were getting almost 10 to 1 on a massive route. Now, oil would have to move $5 today, but guess what? We've seen $3 moves real easy.
And I've got 275 moves on the same type of trade.
I mean, we just got 50 cents up and 50 cents down in like 3 minutes.
Right.
So that's not out of the realm. So you were in a 31 to 36 spread, right?
Yeah.
It was trading at 30.90, so just so everyone understands, it's even below the spread.
That's
going to expire completely worthless unless it ticks above 31.
And that's the big risk.
Yeah, because you're paying premium in that the market can just stay flat.
It was all premium.
And you lose your entire investment.
Right.
But to go over it, this is the trade that you were looking at, and what's great is the market's literally right at where it was when you got in. So your trade, you got in at 31.42. You're buying, you're looking for it to go up, and you're risking $42, which is the 31.42, the 42 cents. It's $1 per penny, basically.
Right.
And your max profit is $4.58. Now, again, that needs to go to $36 for max profit. But you can see how, every dollar in oil is $100.
Right.
So, and what you're saying to me, you're looking for maybe like $1.50, where 3 times what you're risking.
I'm looking for 3 times my money. Exactly.
And you still, you still have that massive upside.
Oh, I still might get it.
Yeah.
That's.
And so you had multiple contracts, and what did you do at the break? You put in maybe half of those, almost half of them. You said, why don't I put an order in, because you know how they can spike.
Right.
And it was at like 31.85. So we'll see if it can creep up there.
Right.
I like the trade, just in terms of, we've seen the volatility you have. It's not a massive amount of money you're at risk, and you know you're capped.
It's not. And if you trade gold, folks, I know you folks that like whether it's the nugget or the dust, it's great trading gold in this beyond belief, because what has happened in the gold market is this. It's really weird, man, because was it Tuesday I was trading gold? Was it, yeah, it was.
We were out there Monday.
It was Monday and Tuesday. So I think, no, it was Monday. Yeah, I put the contracts on Monday, and what had happened, I was paying 40 cents in the morning.
Okay.
And I was paying 40 cents, and the spread was pretty big. And
it's probably similar to this. You paid about 40 cents.
It was, and I wasn't expecting the same.
Oh yes, we had this conversation.
Side,
okay. Yeah.
And then what ended up happening? So check this out, because I didn't know this, and this was really cool, because Tommy was explaining this to me when I came back to the booth. So I put that spread on at like 7:30, 8 o'clock, because it was early.
Okay.
It was early.
Yes.
And that cost me 40 cents, and I was loving that. It's like, okay, man. Then, but guess what? What ended up happening? At 11:30, because gold wasn't doing that much, right? The spread was only 40 cents.
The premium.
No, the premium.
Yeah.
I'm sorry. No, I paid $2. Right. That's right. I paid $2.
So just to put it in, you were trading a 1,200 to a 1,250 gold spread.
Exactly.
I remember it, because it is. This is a great opportunity.
Right.
It was trading at about 12.12.
Right.
So in that instance, you have 3 times to the upside. It's very similar to this, not even quite as dramatic as this oil trade. But so normally you're going to be paying a decent amount of premium, because you're only risking $12 to the bottom side in the gold contract. Now you're risking more than that in the spread maybe, and you have $38 to the upside. But what was happening was, it was 11:30, I think, and those were expiring at 1:30.
At 1:30.
So you only had 2 hours left.
40 cents.
So there wasn't, it wasn't even, it was barely any premium. And what I was explaining is that implied volatility, right? So there's not much premium, because that spread is almost getting tightened, as in you have $12 to the upside, and realistically you're not going to get a $40 move within the final 2 hours of the day unless something catastrophic happens. So with that in mind, you're not going to be paying as much premium, because it's not priced in, because the implied is that you not really have to pay for that upside, because very seldom will you ever get that upside. But it's great, because it comes almost an equal trade where you're paying no premium, 12 to the upside, 12 to the downside.
Right.
Yeah.
And what happens is that I think they just sold them. Oh, not yet, huh? Let's see.
You got to get 31.85. We can see the market.
Oh,
You're
good.
at
I got it. Okay.
31,
Okay.
31.55 right now. Yeah.
And so the cool thing here, folks, is that, so just picture this, because if you trade gold futures, this was the setup. The setup was that I put $485 up for
probably 10 contracts.
yeah, for 4,500 to make 4,500 on the other side.
You were trading 10 contracts.
Right.
So to put it again,
it was like, you got to give me a break,
and
man.
if you just keep it per contract basis,
That's
it was
right.
very similar to this. You're
It
putting
is.
up about $50
Yep.
with like almost about 450, and
Right.
that's because it's a $50 gold spread. And so once you get used to those levels where
Yes.
everything is on the basis of 10, drop
Right.
the zero, add the zero, and that's where you just become comfortable with what means what. And we get some action in oil, that's for sure, man.
Yeah. So check it out. You can do it right in the front page of
Yeah.
TFNN. Just hit it, folks. You
Try
know.
that demo account and watch these news events drive everything. And
Yeah.
whether, you know, we met a lot of people that are just trading the binaries and doing well out there, which is interesting.
And we're going to have one of these guys on, and
Yeah.
we saw something
Our
that was
man
really.
Butch, he's gonna be coming, baby.
We saw something really intriguing, folks.
Yeah.
I'm telling you, man. And
It is interesting going over those different methodologies, isn't it? Because it just opens your eyes to what's out there. You know,
no,
so many different strategies.
huge.
Yeah,
No doubt, man.
Yeah.